Real Estate Lab. Welcome to the Real Estate Lab Investor Course for Multifamily Investing. I'm David Toupin, and I am creating this course for you guys, for anyone who is a beginner in the multifamily space, trying to advance your knowledge in the multifamily space, trying to get into the game, and for anyone who's in our Real Estate Lab community and that wants to learn more and step that knowledge up on the intro level side of things so that you can faster work your way into this space. Little bit of background on myself. I've been investing for about 6 years now in multifamily specifically. I started at the age of 19 and 20, where I bought my first apartment complex. It was a 12 unit. I bought another 12 unit, and I bought a 96 unit, and I just kept rolling. I've bought 1,200 plus units to date, valued north of $100 million. And I've also bought commercial and self-storage space as well. So I've done all things real estate for a little while now, and I've taken a lot of time to master a lot of parts, especially of the multifamily space. And I want to share that with you guys because that is my strong suit, is multifamily. And I want to help impart some wisdom on you guys so that you can really speed up your learning process. One of the biggest things as you're getting into this business is the knowledge. The knowledge is going to give you the confidence to go after those deals, which we're going to talk about in a little bit. So I want to give you guys a little bit of a course outline for what we're going to be going over in this video course here. We're going to get started off with day one as a multifamily investor. What are the things you need to do day one from the start? Starting your company, setting up your LLC, and then we're going to dive right away into deal criteria, right? The most important thing in this business, after you have this base of knowledge, is finding deals. That is the lifeline and the basis of the foundation of what we do in this business is finding deals. And so we're going to go over finding deals, setting your deal criteria, what markets to look at, how to talk to brokers, and then we're going to get into the numbers in depth. What are cap rates and NOI and operating expense ratios? How do you underwrite a deal start to finish, right? How do we get into these spreadsheets, and how do we use Real Estate Lab, our underwriting software, and underwrite deals so that we know what price to offer, which is extremely important. And then we get into locking up the deal. Once you have a deal, you make an offer, and you get an offer accepted. How do you lock it up? What's the next step from sending a letter of intent to a purchase agreement to getting it fully under contract? Then we're going to go over the transaction process. What happens once you're under contract? Physical due diligence, your inspections, lining up financing, working with the title company, working with the banks, all of those things, renovations. Then we're going to talk about funding a deal, syndications. We're going to go over syndication in depth, right? We're going to talk about raising money, what things to do, what things not to do when raising money, creating an offering memorandum. Then we're going to talk about financing the deal. What types of banks are out there, what type of financing is available to you guys, how to qualify, how to work with the banks, understanding what their process normally looks like and what they look for. Then we're going to talk about property management. And lastly, we're going to talk about asset management through selling the property. And then we've got a couple bonus videos for you guys. So that's a course outline, probably 20 to 30 hours. I would suggest everyone that's just getting started, roll through all these videos, right? Some of it, you may not be a numbers person, but you still really need to understand the numbers in this business and how that works. Even if that's not the role you're going to play in your team, that's something that you really need to understand. So make sure to go through all these videos, understand it. If you guys have questions, you could always hit up our team, hit up our Discord if you're in our Real Estate Lab community, and a lot of resources out there on YouTube and Google as well. So that's a course outline. Now I want to talk about why are we investing in multifamily. I think one of the biggest reasons is it is a safe asset class. There's a couple reasons for that. One, the number of tenants. So for example, let's say you have a single family rental home and your tenant moves out. The biggest reason we invest in multifamily is if you have a single family and your tenant moves out, you are paying the bills. The bills now become your responsibility. When you have a multifamily property, two or more, let's say, if one tenant moves out, the other is still going to be paying your costs. And in most cases, the markets we invest in are high occupancy, 90% plus occupancy markets. And so we could have on a 30-unit building, 10, 15 tenants move out, and we're still able to cover our expenses, our mortgage, our taxes, things like that. So that's one reason why it's safe, and we call that economies of scale. Second reason, additionally on the economies of scale point, is let's say you have 30 single-family homes, or you have one 30-unit apartment building in comparison. Which one do you think is easier to manage? It'd be the apartments. 30 single-family homes could be scattered in a large area, right? They could even be concentrated, but a singular 30-unit multifamily apartment building is in one location, most likely has one roof, maybe two, maybe three if it's a couple buildings, but it's at one location and it's at one site. It's very easy to advertise and drive traffic to that because you're not marketing to a bunch of different single-family homes, styles, right? You very likely that you have a lot of the same unit type. So it's easier to market and advertise. Your manager, leasing agent, or maintenance person only needs to go out to this single site. They don't need to drive around and hit a bunch of different single-family sites. And so the management is a lot easier than doing single-family rentals. Third reason is commercial real estate and the way that commercial real estate is valued. We're going to get into this a little later, but I'll touch on it now. Commercial real estate is valued by the net operating income. I'll say it again. Write it down. Commercial real estate is valued. The value of the property is derived from the net operating income or the income of the property. So the more income that the property makes, the higher the value gets. This is a really important concept. We're going to talk about this a little later. I'm sure you've heard of net operating income or cap rates, perhaps. You may already know what that is. Great. If you don't, we're going to delve into it. Those are things that you guys are really going to need to understand is net operating income, cap rates. Multifamily is considered a form of commercial real estate, right? We have multifamily, there's industrial, commercial buildings, retail, office, all that, right? Those are forms of commercial real estate. Multifamily is one of them. And like the other forms, it's valued based on the net operating income and a cap rate. The more your income is, the higher the value is. Unlike a single family home. Single-family home, the value of the home is not derived from the amount of rent you get. It's derived from the comps nearby, right? And the quality of the home and the finishes and the updates that you've done to it and the neighborhood and the area. That's more what values a single-family home. Commercial real estate, multifamily, it's different. So that's another reason. And why that's great is you can exponentially increase the value of a property by increasing the income. So every dollar you increase the income could be a 10 to 20x on the value, right? Every $1 could add $10 to $20 in value to the property. So a $100 bump in rent could add $1,000 to $2,000 in value on a $100 bump over the course of a year, right? If you have a $1,000 bump over the course of a year, it can create $10,000 to $20,000 in value. So we're talking exponential here, and that's what's amazing about commercial real estate and multifamily. Why else do we invest in multifamily? It's a really safe asset class. Again, going back to the economies of scale. When the markets turn, right, we have bad times in the economy, multifamily historically performs pretty well. If you look back to 2008, 2009, 2010, right, when we had our last major recession, multifamily actually performed really well. And in a lot of areas that had mid-90s occupancy at the time before that crash, I'd say they had maybe an 8 to 10% decline in occupancy through that time, which most properties could handle an 8 to 10% decline in vacancy or in occupancy. That's not going to kill you. Obviously, there are still going to be people that, had overpaid at the time and maybe had issues because they had a lot of debt on their properties. We'll talk about that later. How do you buy safe properties? How do you do it right? But for the majority, I would say that multifamily properties are really resistant to market shifts. People always need a place to live. People don't always need an office building. People don't always need a retail space for their business, right? But every one of those people that works in an office or has a business lives somewhere, and they're either living in a home or an apartment, right? That's kind of how it works. A lot of people live in apartments. I think we're approaching like 22 million apartments in the country. There are a lot of apartments in this country right now, more than double there were 15 years ago. So the number of apartments continues growing. The number of properties continues growing as people build more. So there's an abundance of these properties for us to buy. They're always being traded. And really, it's just for you to go out and find the right opportunity at the right price, and you'll be successful in this business. But there are a lot of them, right? There's not as many apartment buildings as there are homes. So, and the prices are higher, right? To buy an apartment building, we're talking several $100,000 to several million to dozens of millions of dollars, right? 10, 20, 30, 40, 50 million, $100 million properties or more. But there are tons of opportunities in that, $500,000 to $5 million range as well. So wide variety of opportunities. You're competing on different levels, depending on how big of properties you're shooting for, and so there's an abundance of different types of properties for you to be able to target depending on what you want to do with your multifamily business. And we'll talk about that next. So why multifamily? Those are all my main reasons. Economies of scale, safety, commercial real estate valuation model. You can exponentially increase the value, resilient to market changes. Those are all several of the reasons why we target multifamily properties. Without further ado, welcome to the Real Estate Lab Investor Course for multifamily investors. Let's kick it off.